Good morning, everybody, and welcome to TheoTRADE Chat. It's Don Kaufman here. Excuse me, May 2nd, 2024. Here we are on this Thursday morning after, of course, the Fed announcement, some wild trade yesterday, maybe a little bit more wild trade today. So SPOOs are up some 35 handles this morning. The question for today's trade, you're going to trust these S&Ps at this point. We have seen multiple occurrences of hitting the lower edge of an expected move. We'll discuss that to some extent this morning. More, I think, pressing though this morning is the fact that the bond market's down. The bond market's down. We have factory orders in about 30 minutes. And order flow is going to be up in the air a lot in today's trading session. This bid back, sure, we got whacked earlier in the week, and absolutely, you could call this, some oversold conditions, especially after yesterday's sell side activity. That was just wild into the close after the Fed, and I caught every bit of this thing on the way down. Nevertheless, right now we have this bid back under us, and in fact, let's switch this to the 30-day 1 hour with a bid back under us. But this is some really well-charted area. And at this point, given where the bonds are right now and volatility is really not backing off, I'm assuming right now this is just a bid back, and that I think you're going to get some crazy trade after this cash open here. One thing is for certain this morning, and that is obviously the bonds are down, the dollar's up. One thing's for certain though is that trade, it's not. The S&Ps are moving this morning, but we have no idea what like an Nvidia is going to look like until this bell goes off in 90 seconds. We have no idea, what tech is going to look like across the board, and that is going to set the stage. You have a good bid under Microsoft. A little bit of a bid under Apple. That's what's carrying the Nasdaq. The linchpin in it happens to be Nvidia, which it absolutely has a $15 bid right now. No clue though how this is going to play out, and I'm going to tell you exactly why. There's no volume this morning. The S&Ps doing 200,000 contracts. Even that is light for the kind of volatility we've seen in the last 24 hours. So as you come in this morning, be a little bit more open-minded than this is just going to be a rip your face off rally. Very well could turn into a little bit of a rally, but we saw that yesterday. There's going to be fairly high degrees of correlation, and that's exactly why I call everything into question when there's high degrees of correlation. You have the financials up. You got the energy sector with a bid under it. As I showed you a moment ago, most tech is bid. Okay, it's got all the makings of a rip to the upside. You're going to come out of the gate this morning wildly advanced, positive advanced decline line. You're going to come out of the gate this morning with ripping ticks to the upside. All that being said, yeah, you better check some ego at the door today, because you get ripped apart on the wrong side of this marketplace, especially with factory orders coming out here in just about 30 minutes. Let's come cash open. As I was saying about high degrees of correlation, yeah, we're there. That's about as correlated as we have seen as of late, even in some of the bigger trading sessions. And as I stated, by the way, it's interesting. Not every product is open. There's order imbalances in this. So there's some big buy side activity, no question. Ticks raging strong over here. But at the same time, I don't mind saying you should be like, time out, time out. Like, wait, this doesn't really add up. And that's exactly the point. Is you can have a ripping day, but so right now we're moving 36 handles. The entire day was only positioned to move about 32. So we've already cracked through the daily expected move. That's that's over and done with. It's also very notable where we are in the SPX. Okay, the SPX landed yesterday, and by the way, you just can't make this crap up. The SPX yesterday landed on the lower edge of the expected move. So you have a bid back under us. With this bid, you're almost like halfway home back to, by the way, this 5,100, that would be unchanged in the week. We saw that kind of action yesterday. All of that transpired, okay, in roughly 2 hours of trade. And you know, again, you're going to point to the Fed, you're going to point to this. Forget about it. It's just catalyst after catalyst. You know, there's so much conjecture about what's driving this marketplace. Volatility is in the driver's seat now. No one can control this. Okay. Whatever conspiracy theory you may have, you got to put that crap aside. Because right now, when volatility drives this, all you have to latch onto at that point is levels. And everybody's looking at this morning. It's going to be a barn burner. It's going to be a ripper to the upside. Probably not what you expected for the first minute. By the way, this means nothing. It means nothing. You're getting a very fast, very sketchy, disconnected trade. By the way, I don't want you guys to think for a second that I'm bared up this morning. I'm not. I'm just simply stating you got a bid back from yesterday, okay, which could be a little bit of short covering. But short covering doesn't look like the S&P's up 0.6%. Nobody gives a damn about up 0.6%. Okay, that's not, again, it's not a ripper to the upside. That's not a rip your face off rally, right? So the problem that you have this morning, it's not that the S&Ps are up. It's not even that we're correlated, and we are correlated to the upside. Problem this morning is that the bond market's down. Volatility is just hanging out. I mean, volatility is poised for anything right now. And you better see that crap, because after all we've been through, you still have a 15 VIX, which in my opinion, for the kind of volatility we've seen lately, actually looks a little bit low. But the point is, it's not backing off. It's giving credence to the idea that all hell could break loose at any moment. Do not mistake me when I say, okay, all hell can break loose. You could explode higher and rip back down. I mean, this is why I've said the entire week, handicap nothing. You just saw yesterday a move from literally, okay, 50-40, okay, to 51, we'll just call it 20. So, you know, 80 points higher, only to drop 80 points lower, all within, you know, an hour. And then people are looking at this and they go, oh, it's a barn burner, baby. We're up 33. You have to get out of the mindset that you were in for the last 5 or 6 months. You have to get out of the mindset that somebody's always going to come in and rescue that dip. Okay. It's fine to think, you know, oh, I'm bullish. They're going to come in and buy it. I'm cool with that. But if you don't wake up, okay, you're going to get taken apart by vol. And this is what happens to traders is they, you know, they literally get systematically dismantled. At first, psychologically, they get screwed with by the marketplace, but markets bid back, drop again. But the signs on this screen are anything but, okay, definitive. In fact, if anything over here, you have signs right now that, yeah, you know, Nvidia's got a strong bid back under it. The only problem with that is Meta's taking a $3 hit. Microsoft, okay, which out of the gate was significantly stronger, backed off a little bit. Okay. This is a day where, you know what? You zoom in, you look at the S&P futures, ticks have actually rolled over here. Okay. Again, it's already gotten scary from what you expected. You expected volatility to collapse, markets to rip. Really? Volatility hasn't collapsed. Markets haven't ripped, but the day is young. Okay. The day is young, and I am very, very two-sided. Now, okay, if we continue to see just a little bit of sell side beyond this, which we might, but if we continue to see a little sell side beyond this, and you start coming down to this neighborhood here of like 50-30, it's only another 15 points. But if you come down here, you're going to drive right into the lower edge of the expected move. And that's important. Okay. And again, you know, somebody was saying feels like the wheels are falling off the bus. Don't think that yet. It's too early. It's way too early. Okay. You know, the factory orders could come out and they could explode, you know, the marketplace higher. This is, you know, again, you know, constantly swallowing chocolate covered hand grenades over here. And as I say, and I have said every single morning, okay, for the last 2 weeks, when I say like this is volatility, okay, if you don't look to both sides of the trade, like, look, I may have bearish positions on. I don't mind saying that. I may have bearish positions on. But if you're not looking at risk reward on both sides, you lose. That's it. Volatility will always win if you can't be, okay, a two-sided animal. And a two-sided animal, like, you know, after a week where you get smashed, okay, into the lower edge of an expected move by a Wednesday, right? You can expect a bid back under it. I don't know if the bid's going to stabilize, but you can expect it. All right. That was a significant decline on Tuesday. Okay. Tuesday is not soon forgotten. I know people have forgotten what happened to Tuesday. Go look at the close of Tuesday and tell me it wasn't one of the most vicious markets you've seen in years. Okay. I mean, it's one of the fastest declines point for point that we've seen that was not per se news driven. And that was on Tuesday. Yesterday, the exact same thing happened. Took a little bit longer, but you rallied literally from this is the start point of the week. Okay. That was the sell off on Tuesday. Yesterday, we're sitting on the lower edge of the expected move. We rallied unchanged from the week and came back around, right? And you think that you're going to be able to handicap because the S&Ps are up 30 or 33. That's the point that I'm trying to make is, you have to be looking at like risk reward. And all you can really do on sessions like this. And again, I have pretty good ideas. Like if we rally today, I've got a pretty good idea of a trade I'm going to put on. It's a couple actually trades I'm going to put on if we rally. If we sell off is where I have to back off a little bit because I got to wait to see if the sell off and, how steep it gets if we get through the expected move. I'll actually set you guys up for what I'm thinking for the remainder of today's trading session. Nevertheless, in the midst, okay, of volatility, you got to just grip onto levels and hold on to them like grim death. You will see things like adhering to the lower edge of an expected move. Okay. For a trading session like today, all right, what else do you have? Look, again, I don't want to discount the ability to come back. Okay. But coming back over here, can we really make it back to 5,100? Okay. Can we make it back to 5,100? That is a 60 point, by the way, not here in the S&Ps. Okay. Right now, we're trading 50.43 in the SPX, a 60 point rally. Okay. It's a 60 point rally from where we're currently at. It's a big friggin' move. So in a day of volatility, I'll kind of gauge some risk reward. And today, and specifically today, this is hard because you're just north of this 50.17. So some big levels over there. So you're just north of the 50.17. By a ways, it would be some sell side, whatever. If the market is unchanged, we're basically sitting on it, right? So that lends itself, 25 point plus reversal. An explosion back to where we started the week, though, is plus 60. Okay. So from a probability perspective, 50.17, it makes some sense. Okay. But if we do get to 50.17, then the question is, before the jobs number tomorrow, do we breach expected move and things get, turn into an absolute crap fest? Again, this is a trading session where it's going to be pretty damn ambiguous until factory orders come out that could really change the way you feel about this marketplace. But on a day like today, you can look at individual stocks, no question about it. Like I'm looking at stuff like, look, Microsoft, which had a strong bid under it in the pre-market. Look how strong the bid is pre-market. All right. It's seeing slippage. That ain't good for the Nasdaq. Okay. Apple, it has earnings tonight. Who cares? Okay. Apple's earnings, unless it comes out with something spectacular, Apple's earnings are almost a non-event. Okay. Are they going to move the futures? Yeah, they're going to move the futures, but nobody gives a damn. It's only a $7 expected move. You're like, but that's kind of it's a what? Okay. It's $2.6 trillion company. Amazon, okay, is almost a $2 trillion company, but Amazon had double the expected move. Ironically, Amazon didn't move for crap, but Amazon was poised to move double, and it was kind of almost a non-event to the marketplace. So with all due respect, I wouldn't expect a lot out of Apple unless it breaches that expected move significantly. Okay. Meta. I'm bringing up Meta. I'm just going through some of the usual suspects. Well, first of all, Google. Okay. You see Google slipped off that earnings announcement. It's stuck out here in the middle of nowhere. Google, if it gets a bid back under it, could be a good short. because I mean, this thing is, it looks like, for those of you that are technically inclined individuals. So this is obviously, okay, some of the earnings announcement that's last week. Okay, it's continued to slip. If you look for a bid back and then coming back down, that is exactly the kind of trade, what we term like bounce and fade. Okay, so obviously news related bounce, the fade. If it bounces again, good. It might actually be a decent short. The only thing, I have to be 5 days after earnings. So this was earnings day. So it's 1, 2, 3, 4. I would have to wait till at least tomorrow for me to execute into there. I don't screw around after earnings. Earnings has a lot of momentum built into it. Next on the docket for me to discuss would probably be Nvidia. As I've said day in and day out, look where Nvidia happens to be. It's back inside its expected move. Even though the marketplace is in heavy degrees of correlation, which obviously that came off a little bit, but even though the marketplace is in heavier degrees of correlation, I still cannot stress enough that Nvidia, okay, is the stock that got us here, and it's the stock that's going to matter, right? You've seen some pretty nasty moves in a couple of the tech stocks, including like, Meta, right? Meta has almost been like taken out a little bit here. It's only up now 26% year-to-date basis. That was the other primary product that was just driving trade. I mean, clearly you have Google. Google's got the market cap behind it, but it continues to be Nvidia that is winning over hearts and minds, and not enough people are spending the time to realize that Nvidia, okay, is a stone's throw off Apple's market cap. Okay, it's a $500 billion, which is, what's a $500 billion? Nvidia now is a $2.1 trillion company. But the big differentiating factor, and why I'm mentioning Nvidia so often, excuse me, look at Nvidia from a volatility perspective. Now, it's been, I don't know, a couple of weeks since I've mentioned this, but Nvidia, its average volatility, okay, let's call it what it is, and don't look at these 43 days. Those are too new. Let's call its average volatility somewhere around 60%. By the way, if you want the true average volatility, what's termed a VIX style volatility. The VIX style volatility, okay, would be found right in here. Okay, and you go, well, what? Well, there's a current IV percentile, okay, high implied volatility, low implied volatility, but the implied volatility, this right here, which says 57.27, that is what we term a VIX style implied volatility, is 57%. You go, why should I care? Because if you look at Apple, Apple is basically 31%. So Apple ain't crap to Nvidia. Nvidia, if you volatility adjusted, just do some really cheesy napkin math. I know we have like electrical engineers. They're like, can you put it in kilojoules for me? Okay, put it in kilojoules. I had electrical engineers here at the house yesterday. They were killing me. They were killing me. Okay, if you plug this into this, okay, God, I got your kilojoule right here, buddy. They were trying to figure out, as we rebuild our house, I'd have two electrical engineers here, which possibly the most painful hour of my life. What's worse than one electrical engineer? One talking to another. It's fair. It's fair game. So I have two electrical engineers here yesterday and an architect. It's the Costanza. And an architect. It's the highest. Okay. A city planner. No. Anyway, the engineers were arguing over like being able to add certain things, and neither of them thought to ask the question, how much power comes into the house? They had an assumption, but they didn't actually ask the question. So I had to take the electrical engineers and say, we have enough. Oh, it was killing me. It was really killing me. Somebody was saying that their XLF trade filled. We should be really right on the dance floor, but we're not home yet. Now, again, I'm $1.33 offer. We're close. Hmm? We're definitely close to on here. Um, believe that crap? I was like, I want to add another Tesla plug. And they go, you don't have the power for it. I go, I do. They go, why do you seem so sure? Because I am. You know, I was paying probably $400 an hour. Okay. That's if for each of them. That was as good as a visit with an attorney. Huh? Ah, it's good stuff. They were not from Canada. They were not from Canada. Actually, both of them were actually really nice guys. But I was cracking up. They're like, "Why would your house have that much power coming into it?" And I'm like, I don't know. The way now we're getting really edgy in this marketplace, and I'm going to tell you exactly why. Now we're starting to get much closer to get drawn into the lower edge of the expected move. And if the vacuum starts, there's no stopping it. Okay. The only thing that could shake us right now, look at the time, it's 13 minutes till factory orders come out. Now, I don't know what the factory orders are going to be, but you got to be very, very suspect here because the bonds are leaning lower. They're not down that big. They're down almost a point, but their bonds are leaning lower. The notes are definitely down. Speaking of the bonds, the volume in the bonds today, it's big. Big waves in the bonds today. The volatility is starting to pick up again in the marketplace. So vol just picked its head up, and that's why I said to you this morning, you come in, you better check whatever crap that you think, check it at the door. You don't think in volatility. As I said, like the only way to think about vol, okay, is you just hug onto a level like you like for grim death. That's all you can possibly do. You have, I'm talking about levels. You have levels, and there's nothing else that you could really latch onto. And you just, pick your levels. I use expected move extensively. I don't have a lot of other, spectacular levels. Hey, there's people already calling like, we missed the 50-day moving average. That means we're going 4,800. I'm like, whatever, man. That's something you can't see. There's no foresight to what vol is going to be because volatility is all reactive. Okay, volatility, once it like cracks open, okay, the ball of volatility. You think of, like, in my mind, I think of volatility as this giant ball of risk. This is why people think that they're getting messed with. They think they're getting screwed with by market makers. Volatility is this gigantic ball. And the ball fits inside of a very nice, very small cup most of the time. But once the ball gets outside of the cup, okay, it expands dramatically. And the ball is very, very large. And what's happening right now, I mean, the best analogy, honestly, I can give you, what's happening when I say the ball, okay, ball is the gamma risk. Everything that you do in this business, I don't give a damn what you think about Apple, and none of these stocks really make that much of a difference. It's the S&Ps, right? So you have this ball of risk, and the ball, okay, once it's out, okay, grows quite substantially. It's a ball of risk. Okay. If we start to roll down the hill, everybody has to hedge in the direction of it. Okay. And the only thing that you have is these expected moves. So the ball rolls down the hill. Okay. And the ball could actually get stuck here on an expected move. Okay. We bounce a little bit overnight trade. How do we bounce? There's always some short covering. There's always going to be some short covering, okay, to protect yourself, mitigate some of the risk. So we bounce up a little bit, but that ball is extraordinarily heavy. And whichever way that ball starts to roll, okay, everybody has to move in the dynamic with it. But all of a sudden, when you start hitting levels very close to like expected moves, you can start to bounce back and forth. And that's when it gets crazy. That's exactly where we are right now. Okay. Where literally we get to this lower edge of the expected move, we rally up. I mean, this is the crap where you feel like somebody is literally like just, screwing with you. Okay. It's like the little voodoo doll, you're getting poked. That's how people feel in the midst of a volatility like that. You shouldn't. And by the way, even though we just, sold off this morning, from this 85 handle, let's call it, to the 60 handle. So you've sold off like, 20 some odd points or whatever. Who cares? Who cares? You could explode right back up. You have 10 minutes till data comes out. And I'm going to tell you right now, what you're going to see is contract size in the S&Ps ain't half bad. We're doing almost 5,000 contracts a minute right now. Just take a quick glance with me. Okay. Just take a quick glance. We're averaging almost 5,000 contracts a minute. About 6 minutes from now, contract size is going to completely disappear. Why? Because everybody's going to say the same thing I am. Factory orders, which is coming out. Factory orders, which is coming out. Most of the time, nobody gives a damn about factory orders. They can move markets a little bit. It's what we do, durable goods. But factory orders, durable goods comes out. And that is going to be scary because it's not going to take much to create. I mean, the marketplace, boom, could explode. We could easily be up 60 handles. I know the S&Ps are up 17. We could be up 60 handles in 20 minutes after factory orders. On the flip side, though, we could actually get driven right into the lower edge of the expected move. And I know people get frustrated with that. You're like, you're supposed to tell me where we're going. Okay, I am. I'm telling you right now. Okay, this is going to be a binary announcement. But the issue and what is at issue right now is the bonds are totally in play. They're like leaning a lot lower. Doesn't make me feel warm and fuzzy. The dollar, which got whacked yesterday, has got a bid back under it again. It's not a warm and fuzzy feeling. Volatility is poised. Okay. The financials already rolled over in the day. They're actually down on the trading session right now. That injured the advanced decline line dramatically. So you're hanging on, okay, to a bid back by a thread. So again, take it for what it's worth. Being up 16 at this point because you're in vol, it's basically like being flat. Let's go look at some stocks before we actually get into this. Then I'll actually talk about a few other aspects in here. Okay. Somebody's saying, did you do that when you were a hedger? When you're hedging, you're not like doing anything. Hedging is just being reactive. As the market moves, you're mitigating risk. You're mitigating risk. You're always mitigating risk, though, on the wrong side of the market. So if the market's going up, I'm usually buying as a hedger. And if the market's going down, I'm usually a net seller because the firm that I worked for was always selling premium. We were always what we term short gamma, always. At the time, is 98, 99. Things were freaking crazy, man, in 98. Anyway, we're right on the dance floor to fill in XLF. So what's going to happen here is if news comes out and the market breaks lower, you will fill in XLF. You're within 4 or 5 cents. Okay. And I'm going to ready an order in here. Okay. Ready an order. And the reason I'm having to ready that order is if this thing does fill, it's going to be fast and we only may get a couple of moments on it. So you can see on the XLF trade, I'm working $1.33 offered and whatever, we're $1.27. I don't know if we're going to fill for sure, but we're damn close and with news coming out. So I know I have all shorter time today. It's Thursday, but let me bring up a couple of stocks that I was looking at here. There's no real huge earnings. I like looking at stuff like Peloton. Okay, take a look at Peloton, which was wildly higher in pre-market. They don't like this. They don't like this at all. By the way, this is the COVID trade gone awry. How wild is that? Right? I mean, not positive, not positive at all. The other one, okay, this one's worth noting, DoorDash. Okay, Jeff Bierman's always screaming about how this thing is completely worthless. Okay, I don't know about worthless there, Jeff, but they have learned to lose money and make it up in volume. So in DoorDash, it's moving like $15. The point that I wanted to make in here, okay, Jeff, I'm totally front running you if you're listening. Point I wanted to make and move to its expected move. Like it's not that crazy of a move. It moved almost precisely what it was anticipated to move. There's a few other ones that are out right now. I saw Carvana. Carvana has actually made a stellar comeback. If you haven't looked at this stock, okay, this is one where I'll honestly say I'm not just surprised, I'm pretty shocked. Okay. If you asked a year ago, I would have said they're going out of business. I think everybody would have agreed they're going out of business. They were hemorrhaging money a year ago. I just remember this one off the top of my head because these Carvana, those giant like car dispensers, they're all over Phoenix. Like when you drive around the freeways in Phoenix, you see Carvana, the car dispensers. My kids always like want to go up to them. And I'm like, it's not like a claw where you put in $1 and grab a friggin' car out. You know, you just pay for the damn car and then oh, it comes down in an elevator. Oh, but still my heart. That's some technology in there. Anyway, um, yeah, not trying to be sarcastic at all. Anyway, this one was also expecting about a $15 move, okay? And it's double the expected move. So that one is a decent size, decent momentum in that one, if you will. With that being said, again, we are going to have news in just a moment, okay? Nvidia is also maybe fading a little bit from some of the highs, but difficult read, okay? If I didn't, know better, you think that this marketplace, okay, wants to explode back to the upside. And if you're thinking that right now, I wouldn't disagree with you. I think the market does want to explode back to the upside, okay? Unfortunately, I'm left knowing that this bond market, though, it's rallying right now, and that's actually adding, the bond market's rallying and adding to fuel the S&Ps back a little bit. But again, in 3 minutes, I hate to say this, but nothing matters when the S&Ps move 18 points, which is about just over half the expected move for the day. It's a nothing move. Like the market right now is nothing but noise. Okay. And right now is when I expect all the volume in the S&Ps to start to dissipate. Okay. And I said 6 minutes, and then the volume will just disappear. So we were averaging a few moments ago, we were averaging close to 5,000 contracts a minute. Okay. Volume is gone. So this is very, very clear, very, very concise. Okay. That they're about to light a fuse in the market. So just, keep your head in the game over here. By the way, they can light those fuses and things don't always have to get crazy, but this one looks like it's going to be pretty good volatility in here. The trades, and I'll talk about this more in a minute after the announcement comes out. The trades that I'm looking at right now, one of them is actually, and I haven't traded this in years, XLV. I'm looking for XLV to bounce, and then I'll try to fade it again. That's one of the trades I'm looking for. That would be an in-out spread. The other trade I'm looking for is more or less in catapult. Okay, so 1 minute till the news comes out. The other trade I'm looking for is in catapult. In catapult, I'm going to let markets kind of dictate my next catapult trade. So I've got a bullish trade in the Qs. I've got a bullish trade in the XLF. Okay, both of those have like 70 something days left in them. It's fine, and both of them are completely paid for. I've already closed. I'm shopping another catapult over here. When I say I'm going to let the marketplace dictate, if the markets break lower, I'm going to sell puts. Okay. I may actually put on a put spread in the Qs. Okay. Sell puts in the S&Ps and buy a put spread in the Qs. Then I would have a call spread and a put spread in the Qs, just looking for a big move in the next 70 to 80 days. I think that that's pretty reasonable too. So let's come to factory orders here. Okay. See what this sparks. Remember, the first move might not be the last. So S&P's 15 handles. Okay, that news is out. All right, big moves inside of the bond market. Bonds are actually just backing off a little bit. Okay. By the way, it could take a couple of moments for this to be absorbed. So durable goods, pretty much a moot announcement. The markets are still going to move. I see the Nasdaq moving, but just to point out again, I could care less about what the actual news is. Here's the easy way to see it. Pretty much in line. Okay, in line. So these are the big numbers. Month over month is in line. Okay, and durable goods in line. That's why you're actually not seeing a critical move. Okay, nobody wants to rock this boat. Okay, nevertheless, the volume is already surging inside of the S&Ps, so it doesn't matter that they were in line. Like that doesn't matter. All it did was serve the purpose to light the fuse. Okay, and the bond market here is not moving a huge or critical amount. So yeah, bear with me on this one as we kind of look to both sides of trade. Again, the S&Ps. Here we go. We're getting pulled back to the expected move. We're really close. You know, I'll stay with you guys for a couple of moments on here, but that's an order I needed to fill from the other day. Apologize for my order fills in there, but that's it's working for me. So S&Ps are coming right into the lower edge of an expected move. Again, it is, as I said, it is. You know, we started the session, the S&Ps were up 35. Here we are, 32 minutes into the session, and you're basically unchanged in the day. So we are coming to the lower edge of the expected move. If you missed last night's video, what I was actually prefacing is, and I'm going to leave you with this, and then Tony Rago is going to come on in a moment. But you know, I'm actually, if you guys don't mind, I'm going to let Tony in here right now. Is that okay? Can I let Tony in here? I'll stay on with Tony for a couple of moments. So we'll let Rago in. Come on in, Tony. I'm never on with Tony. It's probably a good thing. Okay. Turn your damn camera and mic on, man. Turn it on. So it's okay, Tony. You can come out. Holy, you're green. Yeah, anyway, I figured
great,
what the hell. Yeah, well, I figured what the hell, have you on with me for like a couple of minutes and I'll turn it over to you. So one of the biggest things.
It's your kind of tape. The Bears are killing it.
Yeah, one of the things I was talking about today is, you know, when like, look, we opened up the can of volatility. It's open. There's nothing you can do about it. And at this point, it's all about this ball of risk that just keeps rolling around. And everybody has to hedge in the dynamic of it. But if we get close or anywhere near like the lower edge of an expected move, which we're at, we're driving to it. The whole question for the remainder of this week, okay, you're going to latch on, and this number is SPX, and it's really important that everybody denotes because SPX levels are different than S&P levels. The number is 5017, right? And I was talking about that in last night's video. So the number is 5017. And the probability is like you're always, you know, you have to say, well, probability is going to be higher that we're going to be inside the expected move by the end of the week. That's, you know, that's always going to be the probability. But the reality right now is the week is really going to come down to this Thursday and Friday, and of course with jobs coming out tomorrow. If we start testing lower, okay, we have, you know, about, I would say about 15 degrees of freedom off this 5017. But if you come down to like 5,000 in the S&Ps, all hell will break loose because everybody, and I mean everybody, we haven't, okay, spent much time below this level. Okay, you start really cracking down here, everyone's going to have to hedge in the dynamic of the move, and that will get ugly, very ugly. The other thing that's really in play right now is, I mean, we focus a lot on like Nasdaq, which is great, you know, but the big player in the room, it's not Meta. People want to, it's Apple. Apple has earnings. Apple is nominal. The $7 expected move. Just check this out. $7 expected move on an 87 vol. Do you know that Nvidia, okay, Nvidia has a 70 vol with a $30 expected move and almost the same market cap? Apple's earnings don't mean crap. It's a market mover. Like it'll knock the futures around a little bit. It doesn't mean crap. Nvidia is actually still more important tonight than would be Apple. I mean, the volatility basically says so. It's insane though how much is being, you know, packed into like Apple. Nvidia though is the linchpin into the marketplace. As long as it holds together, the S&Ps will continue to bid back. If Nvidia starts to barf, it's over for the Nasdaq. It'll be over for the S&Ps, and it'll be a really ugly trade. You know, one thing people also haven't taken into an account is look at some of the. I know people are going to be like, "This is not a competitor." Look at AMD on a year-to-date basis. You know, AMD, which was one of the high flyers, people were like, "It's the next Nvidia." It's flat on the year now. Everybody is missing. That's flat on the year. If you look at like Intel, okay, Intel is down 36% year-to-date basis. Like the AI trade right now, what is it? Microsoft, which is only up 7%. Okay, that even fell flat on its face. It's left to Nvidia. Okay, and then somebody's like, is super micro? Super micro's up 150%. Looks like it's about to fall apart.
Yeah.
Crazy stuff. Anyway, I'm going to
And then the micro strategies also with the weakness of Bitcoin is just kind of helping the effort as well.
Bitcoin is, I know a lot of people are like, it's this, it's that. Okay. The correlation is really picked up with the S&Ps, but I don't think it's on the forefront of what's going on in the S&Ps. I just don't think the liquidity is there. I don't think it might tell us a little bit about volatility. I'm just not like the huge believer, and I am also looking like I'm watching Broadcom as well. Broadcom seems to follow a lot of what Nvidia is doing. Year-to-date basis, that was only up 13%. But everything that was high flying has fallen, with exception of Nvidia. I mean, you can say Google too, but I mean, Google's going to be one that's going to be hard to chop out.
And that's
Did you see?
chart.
You want to see something crazy, man? Google paid. The news came out. Google paid Apple $20 billion last year to be the search engine of choice in Safari on mobile devices. So think about this. They pay them, but you're like, oh, it's only 20 billion. It's Apple. That was 17.5% of Apple's revenue. And right now, the regulators are calling it into question. So that's not being felt in Apple right now, but it sure as hell may have to be, because if the regulators turn around and they go, you got to separate yourself from Google to some degree, well, both Apple and Google will probably donate enough money that would never happen. What's cheaper than losing $20 billion? Giving $1 billion of it, okay, to your local politician. Anyway, by the way, look at this. Look at this. Okay, I'm staying on until we hit the level. You don't understand, man. You don't understand. Anyway, I'm gonna get you started over here. Anything else you guys are looking at?
I mean, we're just trading our little NQ here.
Yeah, which is
We're long 26. This is, again, this is the only time that I counter trend on the NQ, but we've been short all morning and got the day made.
Cool.
So
yeah,
this thing's angry today.
It's the volatility. Like I get excited when volatility first comes, but then I'm sitting here and I'm like, we haven't had that precipitous break. It just hasn't happened. And the one thing I'll leave everybody with this parting thought. My parting thought is, okay, now you're at the point where we've already seen the vols out of the can, but now this is where all hell can break loose. And I have to say to you that I thought, okay, for a brief and fleeting moment, and I'm actually going to show exactly where I thought this. Go back like 2 days ago in a 1 minute over here on Tuesday into the close. That was absolutely unequivocally vicious. That was unrelenting. That was the kind of crap that if the marketplace was open another half an hour, we were going to be down 200 handles in the S&Ps. We opened up a sell side activity though, and that was 10 minutes. And in that 10 minutes, the damage that was inflicted, okay, whatever, it was, 35, 40 S&P handles. Okay. You knew from that point on, things were going to be rough. Yesterday just did nothing but confirm it. And today, it's rough. It's rough out there. By the way, we're going to mellow out. We should mellow out right here because we're at the lower edge of the expected move again, but not exactly the marketplace that people had expected. By the way, for those of you that are in the XLF position, we are literally on the dance floor, okay? Right on the dance floor. So I am ready to send a text message on that. If you're looking at this, it says $1.26 and then it jumps to $1.33. The real market on here is probably $1.32 right now. You'll see this jump to $1.32. And I just know I'm looking at it on another screen, but there's one bid offer spread that's a little bit wide right here. That bid offer spread's a little wide. When that one tightens though, this thing should fill. Look, people are filling right now. You can see them filling. There's 500. We only have 2,500. We did 4,000 contracts per leg in that one the other day. But people are definitely feeling we're going to get out of that as soon as we possibly can. Tony, I'm going to start and stop, and we'll get you up here. So
right.
stay tuned.
Cool.
Tony Rago is coming on right now.